When we speak of life insurance, the first thing everybody thinks about is death.
Death. So what are we missing, Lemmy?
That knowledge. Let me ask you something. If something was happening to you today, are your family protected?
The Index Universal Life is so important and has such good benefits in it that really is not something that we should be thinking twice about.
What's your option? What are your choices? Do you have a will? Trust funds?
A trust basically says all these things in here, my house, whatever it is, I'm going to put in this lock. And only you have a key, now the trustee.
Think about it. Most of us live life like tomorrow is always promised.
And my friend asked her daughter, would you take care of me when I get old? She said, no, I'll take you to the lodge and I'll be coming to see you every week.
Today, we're going to talk about this subject.
Tuko in the city, chafu mesa. Don Kings in the building. Don Kings in the building. Chafu mesa, chafu mesa. Tuko Nairobi tuna chafu mesa. Chafu mesa. Tuko in the city, chafu mesa. Don Kings in the building.
Hello, guys. Welcome back to another episode of Chafua Meza. I'm your host, Lemmy D, and today we have a special guest that has a very, very educational subject that we're going to talk about. Without further ado, I welcome my guest.
Thank you so much, Lemmy. I have been watching your podcast for a little bit, and I'm very excited about what you bring to us because you really, really do educate us. You bring different perspectives to life, especially to our life here in America, and and most of what is happening around us. So thank you so much. I'm really delighted to be here. I was very tickled actually when you asked me to come to your podcast because I did not expect it. So I'm really glad to be here. My name is Marianne Getz. Thank you. And I'm a licensed financial professional. And I think that's what my host here is talking about, that we'll be talking about the financial preparedness.
Yes. Thank you so much for joining us, Marianne. This is a special, special moment for everybody, including my viewers back at home, because they're about to be educated from you. And I know this is something that most of us tend not to listen, I mean, not to have this kind of conversation. And I hope they're going to learn something by the end of this episode, because this is one of those topics that's important to have. Without wasting no more time, let's start by wills. What is a will, if I was to ask?
Very interesting because a lot of people think of a will as your final word. But basically, a will is merely instructions of what you want to happen after you're gone. Who is to do what, who is to get what, and how things are to be done after you're gone. That's basically instructions. That's just what a will is.
So you pretty much just controlling your legacy.
Not really. You're not even controlling it because when you give the instructions, there's more to that than just
Your legacy.
getting there. The legacy has not even started. The going forward from there has not even started. It's a little more complicated because I always think of the will, and disclaimer here, I am not a lawyer. And whatever information I'm going to talk about or whatever I'm going to talk about, wills or trusts or any of that, consult a lawyer and let them guide you. I am giving the information based on my knowledge as a financial professional,
Okay.
not from a legal standpoint.
All right.
Yes.
All right.
So I look at a will as the things, having a house and you have your chair goes here, your table goes there, your kitchen is here. Basically, the instructions of how you think you want things placed. But anybody can come into that house and take what they want. So you may die, or when it's time for the will to be, what's the word I'm looking for? To be actioned, but then you didn't close the gate. The house is closed. Anybody can come in, or the people you have in that will come in, take what they're supposed to take. But you didn't lock the gate. And that gate is what I call the trust. So the trust puts a lock, and that has to have the one person who is the trustee, who has that key, who has the instructions of whatever the will is saying. The person who is named in that will is actually doing the right thing, and nobody can question it. Because a will can be, regardless of what people say and contrary to what people say, a will can be contested in court. A will can be contested because if you are my sibling or I'm your mother, because I'm probably old enough to be your mom.
Yes.
So, and I have 5 other children. I may love you more than I love the others, which is not supposed to be. But you've been the one taking care of me as I'm getting older, and you've been the one present. So I decide instead of doing everything evenly, I'm going to give you a little more than the others.
Yeah.
Then there's the last born who decides, I'm always being the favorite, even if I'm not being there, but why are you getting more than I am? I'm going to court, I'm going to contest, and I'm going to make sure that the court actually decides eventually how this will is going to be dismantled and everything realigned and reallocated. So having a will is basically giving instructions, but not necessarily putting a lock to it.
It's just a legal agreement.
Exactly.
That's what you're doing to it.
That's the way I like to explain it.
So again, back to our viewers, because I want them to understand this point right here. Is there an age limit or an age to have a will?
To write a will or to execute a will?
No, to write a will first.
To write a will.
Yeah.
You have, what they say is that you have to be of legal age and of sound mind. Basically, as an adult here in America, 18, you are considered an adult. So anything you do at the age of 18 is considered that you know what you're doing and why you're doing it.
And
But you can say anybody, even a 1 month old, couple of days old person can actually be named as a beneficiary of a will. Even dogs and cats and animals. Here, you name anything to be in your will, to be a beneficiary of your will. But you have to be 18 and above to be, or guided by somebody who is 18 and above to write a will.
That's a very, very good question. When you mentioned that a cat, a dog, a pet pretty much can be a beneficiary.
Yes.
So how does that go about? Because that's not a human being.
Even what are they called? You can will anybody and anything. You can name a foundation to be a beneficiary of your will. So it doesn't have to be a human being to be a beneficiary. Because basically you're saying, when I die, I want my stuff to be distributed to these people, or to be distributed to this home, or to make sure that my dog is taken care of until when it's dead. But when it's let's say it's an animal that you're leaving your stuff to, or you're naming in your will, there has to be somebody else who is actually going to execute that will.
Yes. And that's what we fought. Yes, that's the trustee that comes underneath
That now, you can have somebody who is going to execute the will, who is not necessarily the trustee. The trustee is somebody a trust basically says, all these things in here, even this will, my house, whatever it is, I'm going to put in this lock, in this box called a will. Called a trust. And only you have a key. Now the trustee has the key, and the trustee has the instructions from you, or from me in this case, saying that the will in there has to be intact. Everything in that will has to be allocated, and nobody is to question. So basically, a trust is that document that says even the will cannot be contested. And that's why it cannot actually be even contested in court.
So a trustee then can be pretty much like a manager.
A trustee can be, yeah, it can be a manager, but it's somebody. Basically, anybody can be a trustee. Some people name lawyers. Some people name their family member or someone they know is not going to mess up. You
Yes.
better trust your trustee. You better hold them in very high esteem so that they don't mess up with anything. And a trust actually is filed in court, so it's guided.
Yes, yes, I agree. I agree with you. So that's what I'm saying. It can be anybody, your relative, your family member, a
Correct.
lawyer, anybody,
It can
but
be anybody.
they all act. They're pretty much managing your trust.
Correct.
So they're acting like a manager to it. They're not gonna change anything.
They are
They
not,
just
yes, unless they have instructions from you.
yes.
Yes.
Oh, okay.
Yes.
That's. Oh,
Yes. Yes.
I like that.
Yes.
And
It's
that's
a concept we don't have a lot back home. And, it can lead people to get into lots of trouble if you don't have it.
very true. Of course, we have had stories, especially coming from back home, where we lost someone, and then there was no will left, and family members start fighting each other.
Yeah, exactly.
There was, I mean, so much hate came from that, and some people even then took a step where they unalive each other, so they can take whatever was left from their parents or maybe the other significant. So yeah, this is something that is dear to our hearts. Like we really need,
Absolutely.
we
Absolutely.
we really need that.
Yes.
And it's pretty interesting even when you mentioned that, because we always, especially even for me, we always think like this is something that only older people are supposed to do or maybe have it.
They
But
think it's people who have money, that if I have money, I'll have a will and a trust when I have money. It doesn't matter, because even if you don't have that money, you have something. You have your bank account. You have things that you'd like to pass on to other people, or things that you like disposed of after you die. I mean, we have to come to terms with death, because that's actually one of the biggest situations. Is like, why should I write a will? I'm not dying. Or why
yes,
should I have a trust? So
yes,
and so is going to take care of things. No, we have to come to terms with the fact that we are going to die at some point. And we don't want to die and leave things in jeopardy. Even if you're here and you're here in America, you have stuff in Kenya,
yeah,
leave instructions on how those things should be taken care of. Have a trust here, have a trust in Kenya. Have a will saying all the things that need to be done when your time comes, because it will come. I mean, let's face
yeah.
it,
We all have to go at some point.
we will go at some
Yes.
point. Your time may not be my time, and we will go. But I believe as Africans, we are afraid of that word death.
And why is that?
It's so final. It's so final that I'm not going to see Lemmy. I'm done. I'm gone. You
That's
know,
it.
my children, my husband, my family, it's like I won't have this life. But I think mostly is the concept of the unknown. We don't know what is there after death.
That's true.
We know I can come from here, I will go to Washington State, and I'll come back. Or I'm now here in your studio and I'll go back home. And things will be going on the way I left them at home. But when you cross that bridge of death, nobody has ever come back to tell us,
Yeah, we don't know the
hey,
other
this is
side.
the way things are over
Yes.
there.
Yes.
We don't know. We only hear concepts of what it's like. I want to believe it's a beautiful place and one day I want to be there. But the process of getting there is what a lot of us don't want to accept.
Yes.
And that's actually something that brings into the reality my whole situation of why I came to start doing this kind of education, financial education to people. Because it became so real to me at some point that I thought, oh my goodness, I think I need people to understand this. I need people to be prepared to be prepared financially, because a lot of us, I know you've lived in America for some time and you've seen a lot of us, we always have a GoFundMe going on. It's not that we don't make money. It's that we are not prepared for things when they happen. Whether you're sick, we'll raise funds to come and help you with your hospital bill or pay for your home or, rent or mortgage or things like that. But is it because we don't know that we could get to that place?
So that's the question I wanted to ask you, because now look, maybe maybe it could be because of culture difference. If you look back in Africa again, like we mentioned earlier, most of our parents or even our grandparents, they never had that thought of there's going to be death at some
Correct.
point. They always feel like we're going to live forever. They're always looking forward to see their grandchildren. Now, in their mindset, they're not preparing, or maybe it could be also lack of education. They're not preparing anything about death. They don't know the process. If I was to go, what's going to happen?
Yeah.
What's the process behind it? They don't know anything about that. And again, maybe our culture, because of we are social people, we can always do a group thing or a community thing where we call each other,
Yeah.
we raise money,
Yeah.
and then we bury people.
Right.
But when we flip that, and then we look in America, it's completely different.
It's different.
Here they have a system,
Exactly.
and then they educate about it. So you'll hear these stories from an early beginning, life insurance, early
Correct.
retirement.
Correct.
You hear these things, and then you start paying attention to it. Like, okay, what is this?
What
things?
is this?
Yeah,
Exactly.
what is
and
going
and
on
that
over
and that's
here?
really the question we need to ask ourselves, because we're here in America. I always say, we are coming here to America. We are doing what we're doing. We are working. We are getting paid. But I always say, when you go to Rome, do like the Romans do, like they say. The
Yes.
saying goes, when you come to America, do like the Americans do. And if you go back to even what you've talked about, our parents and our grandparents back home, there was community. Community was our insurance those days.
Yes.
For them, not us. For them, community is their insurance. Because my grandparents, who lived to be over 100 years, the neighbors were there, my parents were there, my aunties, my uncles, everybody was around them. So even when they got to that age where they needed help, there was a neighbor who would come bring food. There was a neighbor who would come and say, what do you need? My parents were right there. My cousins were right there. So the community rallies around you.
Yes.
They rally around you. They give you, you don't even have to have money, but they'll bring you food. People used to come, my grandparents lived to be over 100, like I said, but there were no other people there who lived as long as they did at the time.
Yeah.
So people would hear, oh, so-and-so is still alive. I'm going to so-and-so's house. I'm going to take the milk. You find somebody has come with eggs. You find somebody has brought sukuma wiki. Somebody has brought something. Every time there was something going on, people were bringing stuff. They're coming to see these old people. They will bring something. Here, do you expect anybody's going to come and see you? Just like, hey, knocking on your door. Hey, I was just coming to check on you. No, nobody's going to come.
Yeah,
And
not in America.
so you have to think in that space. If you are not able to work, if you are sick, and in this house by yourself, you don't have neighbors who are looking after you. You don't have the community looking after you. What did you fall back on? Here, you fall back on insurance. The people who belong to this country. Most of our Caucasian and African American and the others who have, we are immigrants. But those who have been here have that to fall back on. Most of them have that to fall back on. Not everybody. I would say more than we think, that the middle class and the upper class, some of the middle class and the upper class have that in place. You find that they don't need, when they need caregiving, there's something lined up. When they need a burial, there's something lined up. They're not struggling like us when we have to raise money. Every time somebody dies, we have to look for money. Yes, we still have that community togetherness, but here we have a lot more challenges. And even coming together, we still have a lot that we need to to overcome, because you cannot always depend on the community. We are getting to a point, actually, Lemmy. We are getting to a point, us now who are like the ones who immigrated here, our children who have grown up here don't have that concept of fundraising. They're not going to take care of you. No. They are going to take you to a home.
Nursing home.
Nursing home. They are not going to raise funds the way we raise $20,000, $30,000, $40,000 to bury somebody. If you didn't have insurance.
You're in trouble.
But then also let's track back and say that it's not all about, insurance is not all about death. That is the concept now we have to think about.
Actually,
We have to change that.
That's very important you mentioned that,
Yes.
because I want you to really emphasize on that. I want our viewers, especially if you live in America as a parent, and I want you to understand this part. You know, most of our parents, because I've seen this when we have these meetings around, you go to you're actually invited to an event.
An event.
It could be a birthday party. It could be anything.
Yes.
When you attend these parties and you have this conversation with these parents, and then you can hear their mindset. It's like, okay, if something was to happen to me right now, my kids will take care of me. That's why they're here with me. And I'm thinking like, whoa,
Well, not anymore. That story is gone.
you are
That
wrong.
story.
You're
if,
completely wrong.
If today, blame you are raising a child, you've raised a child who is 25 years old, going on 30, and you have raised them in this America, and you are in your 55, 60, forget it.
Yeah, forget it.
They have their life and yours is different. I
completely
remember this conversation a long time ago when my son was probably 8, 9, around there, maybe 10. And my friend's daughter is 2 years younger than my son. And maybe they were probably 10, 12 and 10 around there. And my friend asked her daughter, where would you take me? Would you take care of me if you got old, when I get old? She said, no, I'll take you to the lodge. The lodge is a
Nursing home.
care home, is a retirement home, is somewhere in Wake Forest. I'll take you to the lodge and I'll be coming to see you every week. Or I'll be calling you every week. That is a 12-year-old or maybe 10-year-old who was saying that.
It's the truth.
So that is the truth about a lot of what we will get from our children. So it's time for us to wake up and realize that if we are planning to get old in this country, and even in Kenya or any other country that you're from, if you're an immigrant, if you're deciding to go and live in another country or live in this country when you get old to retire, then you need to have a backup plan. Because you see what happens to the economy. It's up and down. It's up and down. The markets are up and down. You don't know if your 401k will be enough for you. You don't know that what you have in the stock market will be enough for you. Anything you have today in a market that is variable, that is controlled by the variability of the world's ups and downs, you have no guarantee.
Yes.
You have no guarantee.
Exactly. Let me digress a little bit and ask you something.
Yeah.
Do you think it's a good idea to have those nursing homes in Kenya?
Funny you asked that, Lemmy, because I had mentioned in our conversation earlier, I have friends that, we've been together for over 40 years. These ladies, when I go to Kenya, we always meet up and talk. There are nursing homes. There are retirement homes in Kenya. Let me not even call them nursing homes. There are retirement homes in Kenya. And we had that conversation last year. I was home in November. I was home in Kenya in November. And we always get together with my girlfriends. And this one time we were having lunch. And we went to one of my friends' home. She hosted us. We all brought something to eat and have a drink. And we sat down and we were having that conversation. We were all having that conversation of two of them actually have their children in Australia. And so 2 kids in Australia and 2 kids in Kenya. We have another one who was actually waiting for her granddaughter, her grandchild to be born because her daughter was pregnant. And we were all talking. There were 7 of us or 8 of us. And we had that conversation. And one of them said, I am actually looking into the retirement home that is owned by so and so. One of the members, one person that we know of has a retirement home. And she described it. It's a beautiful place. It's a fantastic place. And we were all like, okay, we probably need to look into this, because at the end of the day, even if you're bringing up your grandchild, you're helping your daughter to bring up your grandchild, or whatever form you're in, they're busy with their lives. Kenya is different now. Unless you are more in the rural areas, if your life has been in the cities, and that is where your home is, you call Nairobi your home, or Nairobi and vicinity, it is very likely that you will need somebody to take care of you and not your own children. Or your children will need to get somebody to take care of you and figure out how they're going to be paid.
Yes. It's interesting you say that, because the reason, of course, we do have nursing homes, or retirement homes
homes. Yes.
in Nairobi, or at least in Kenya.
Yeah.
But we don't have too many.
They're not enough.
Yes, I was having this discussion with certain people, because I was looking in their areas, the rural areas where they live.
Yeah.
And I was like, okay, you see right here, I can see your grandma is going through a lot right now. And again, you guys with your busy lives, there's nobody taking care of her the way she's supposed to be taken care of. I think having a nursing home here will be way better than what you have.
Yeah.
What I did notice from these people, many of them were opposing it to that idea. Like, why?
Oh, yeah.
Why would we why? What's the point for having a nursing home here? We have a house. Grandma's house is good enough. All we have to do is just hire people, come over here, look after her. But the point I felt like they were missing is,
Yes.
your grandma is she's in a house, or your grandparents, they're in their own house,
Correct.
but they're lonely in it.
True. Very true.
People who are getting hired are more of for maid.
Exactly.
A maid is not really your friend.
It's not your family.
It's not your
And
family
it's not
either.
your friend. Yeah. Yeah.
They're there
yeah.
to do a job and leave.
And get paid and leave.
And the sad part about that, some of these guys, because they've noticed, of course, by the time they spend time, they know your schedule. I know you're a busy person, so you don't know you don't know exactly what we're doing over here. So once you leave, they probably don't even do a good job taking care of your grandparents or your parents.
Very true.
Because you're not there.
But that's only for a generation, though.
Yes.
Because now you probably are talking of parents who are probably in their 70s. And so their children are in their 40s.
40s, yeah, probably 50s.
Now, track forward and have those children now taking care of their parent, now in their 60s, and now have their younger children now taking care of them.
Yes.
That story will be different.
Completely different.
It will be totally different, because one, you dad or you mom, do you have enough money for me to hire somebody to take care of you? Or am I going to get my own money to hire somebody to take care of you, and I have my children? Life is not the same. It's not what it used to be. Right now, my mother is 95. She doesn't live on the farm anymore because she's 95. She cannot do a lot of things for herself. She has her mind. She's able to get up and do her normal stuff. But she cannot live on her own. So she lives with my brother and my sister-in-law. They are able to take care of everything for her. They have somebody, a caregiver for her, and we chip in and pay for it. But further up, I think about it and think, okay, my brother and my sister-in-law, they're going to get older. Now, I know their children are of the mind that they can actually help them, and they will. But then now, when I look at my nieces and nephews' children who are new, they're new parents, I don't think they'll be doing what my brother and my sister-in-law are doing for my mom.
Yes.
It's, if you don't have your own money, we can't do this for you. Somebody has to provide that money because we have our own lives.
I agree. I agree completely. I agree.
And that's what is happening in this country now with our people. Immigrants, Kenyans, name them. That is what is happening to us now. Because we don't have enough money to retire and have people take care of us when the need arises. Or live alone retirement, even when we are sick, when we get sick. And this is the question that somebody asked me one time. If you got sick, Marianne, today, and you are not able to work, do you have an account that would help you get through? Not when I'm old, now. And that hit a different chord in me because I happened to have a diagnosis that threw me off. And with that diagnosis, I was like, okay, this is too close to home. I don't know if you have time for me to tell you this whole story because it's a long story. And you had a guest the other time who was talking about healthcare and the need for us to go get checkups, the need for us to follow up on checkups. So it was during COVID, we had moved to Florida. And my husband and I are like, okay, since we are going to stay here, why don't we look for primary care physicians? Just to do our routine. I'm healthy. He's healthy. And so I found a physician. I told him, we have a good physician. I think we found a good physician. Let me go. Since I'm not working, let me go and get my physical, and then you can go when you don't. I'll make an appointment for you. So I make an appointment with this physician. And I'll tell you the reason for my carrying this all the time. I always have a mask. And I'm grateful for masks because they have really helped me. So anyhow, I got to this doctor, an Indian doctor, and we click and we start talking. And I love to cook. And she loves to cook. So we are exchanging recipes. We are talking. We talked for about an hour. And all this time, what she's doing, she's evaluating me. Very, very sharp doctor. She said, okay, we'll go get labs done so that we have a baseline. You have your urinalysis, you have your stool test, you have all those. So now we know where we're starting. So I get all that done. The results come in. She gives me another appointment. I go in now to get the results so that we start somewhere. And then she says, your blood work, you seem like you have some form of anemia. So I told her, yeah, even my other doctor told me I was borderline anemic. And she said, they didn't do any other tests? No, they just says, I need to take more iron-rich foods, which I did, and which I do. I exercise, I do everything, and, pretty much healthy. And this doctor, she says, her name is Dr. Ayuni. Dr. Ayuni says, it's not normal for you to be having the kind of diet you have and the activities you have and the lifestyle you have to be anemic. Even borderline, you should not be. There must be something underlying. So she sends me back for more labs. And come back 2 weeks later, and she looks at the labs and says, you have some protein that is off. And I want to understand why it's off. Now she's doing research. She's doing investigative medicine. So she sends me again to the labs, and the labs come back. And this is during COVID. It was 2021. So I got back, I think it was about February or March, maybe February of 2021. So I got back there and we talking, and I see her face is totally different from, even if she's wearing a mask, her demeanor had changed. She's trying to look at me and talk to me, but she's hiding her face. And I was like, Dr. Ayuni, are you okay? She said, do you have anybody with an autoimmune disease in your family? I said, not that I know of. One of my sisters has rheumatoid arthritis, but that's not really a big issue for her at the time. Then she keeps asking me these questions that are kind of vague, but yet leading. Then eventually she asked me, do you have anybody in your family who has a blood cancer? I said, not that I know of. And then I thought and said, no, actually, I think my maternal grandmother, she got sick while I was here. She was in her 90s when she passed, but she apparently later in life, in her 90s, before she died, she was diagnosed with leukemia, some form of leukemia. I thought, that's all I know. So she sits up and comes up close to me, holds my hand, and I'm thinking, now my heart is racing, like, it's speeding so fast. And I'm thinking, okay, I'm dead. I'm dead. So she tells me, Marianne, she asked me, have you ever heard of multiple myeloma? I said, yeah, I've heard of multiple myeloma. I know the disease. Say, how do you know it? So I explained to her, I told her the several people I've heard who had it, blah, blah, blah. And she says, well, you have multiple myeloma. I'm like, no. I told her, no, it can't be. I'm not sick. So she's asked you, do you have this pain? No. Do you have this pain? No. I told her, Dr. Ayuni, I am not sick. I am not having any pain. You are the one who told me I am anemic. Otherwise, I don't have any medical situation. I wear glasses. I've worn them since I was 10 years old. And she looks at me and says, do you know an oncologist? I was like, I don't need an oncologist. So she gets on the phone and calls an oncologist. So I'm given an appointment for the next week. So when she gets on the phone and calls an oncologist, and I'm given an appointment for the next week, and this is like a Tuesday, Thursday. I think it was like a Thursday. I broke. I'm like, okay, I'm dead. I am totally dead.
Wow.
Because it can be that fast.
Yeah.
You don't get an appointment the next
Exactly.
week.
Yeah.
And the doctor doesn't get up and make an appointment for you. Normally, they will tell you their assistant is going to make an appointment. Yeah. So all this, I'm chilling. I'm in denial. I'm like, there's just no way. She's making a big mistake. I went home. My husband was working. I didn't disturb him. He works from home. So eventually when he was done, I told him. And he was also like, that can't be. So the next week we went over to the doctor, to the oncologist. She reads the results of the labs from the other doctor and tells me, oh, don't worry too much. This is not bad. I'm thinking, it's cancer. What are you telling me? It cannot be too bad. Any cancer is bad.
Yes.
But I'm like, but she seems to be okay. She's not rushing anything. Say, okay, we'll do a biopsy. Come this day. Let's do a biopsy. I'm like, doctor, I need to know more. I was there with my husband, so I need to know more. I need to know where it is. And to know how it's, I need details. So she's like, you come back, let's do a biopsy and see the extent, and then we'll be able to discuss now from there. But she's like, I wish everybody would come to me at this stage. I'm thinking, why are you talking about cancer like it's just,
something normal there.
Something normal.
Yeah.
So I go back. I think I went back after the next week, got a bone marrow biopsy. And now is another waiting 2 weeks to get the results. Went back for the results, and she confirms, yes, Marianne, you have bone marrow cancer. Okay. And bone marrow, it's a cancer that affects the plasma, the blood plasma. It starts to produce what they call the M cells, and the M cells overtake the blood cells. It basically overtakes the space so that the bone marrow is not producing as much red blood cells as it should, and the red blood cells are the ones that form the blood, the redness in the blood that really carry oxygen. So that's how you become anemic, because you don't have enough in your system. And most symptoms are like you start having bone pain, because a lot of times when those stem cells are more than the good cells, it starts corroding, the kind of eating into the bones, like the bones of the the big bones of your legs.
Yes.
So it's eating into that. But then it goes to the point where most people are actually diagnosed when they break their legs, they break their hips, they break their ribs, because the cancer has gone into those. It will eat the calcium in your, for lack of a better word, in your bones, so that your bones become thin, and so they break easily. Or the calcium can go into your kidneys and cause kidney disease. So there are various things that it can affect, but I didn't have any of this. My bones were perfect. My kidneys are perfect. Everything is perfect. But I have those abnormal cells in my bone marrow. So she takes the biopsy, confirms, but she tells me nothing to worry about. You don't even need treatment. It's a stage called smoldering multiple myeloma. It's like it's cooking. Whether it will boil over or not, it's an unknown. So with that, what they do now is to monitor. So I go every 3 to 4 months. They check my blood, they check my urine, they check everything to make sure that the urine does not have calcium. If it has calcium, then it means the bones are being eaten up. And the blood to make sure that it has enough hemoglobins and whatever, there are lots of scientific words in there.
Of course.
To make sure that
Welcome to
everything is where
science.
it is. But luckily, I think it's the grace of God that nothing has progressed in 5 years. So I have not progressed, and that's why I'm still very healthy. Basically when right now I go to Duke. So people sometimes will see me at Duke Cancer Center. I'm like, what are you doing here?
Yeah.
Well, I go for my tests. I get blood work every 3 months. And every year I have a PET scan. PET scan basically just looks into all of my organs to make sure that none of them are affected. Could be the brain, could be the lungs, could be the kidneys, and all of that, to make sure that there's nothing in there. Then I have an X-ray of the whole body, and I have an MRI of the whole body. So these are annual things that happen, but the blood work is every 3 months. So I'm in that place where they are observation. Concert of, but the medically I'm termed to be in remission, thankfully. So that I've never had to be treated, but I'm in that watch game kind of situation. And I bring all of this to you so that you can understand why I got into this preparedness. Because all that diagnosis was done and confirmed on the 30th of April of 2021. Now, in 2020, a friend had talked to me about the insurance, but I was in the middle of COVID. We were moving to Florida. I was so unsettled, and my business, I own a wellness center. I'm a massage therapist, and I do a neuromuscular work, which is working with people with chronic muscle pain. So in 2020, we had to shut down because of COVID. And we moved to Florida from here, North Carolina. We moved to Florida. And this friend of mine kept telling me, oh, Marianne, you need to do this, you need to do this. And I was like, I'm stressed out. I don't have time for this. And I did not do it. But the thing that was not done was education. I was not educated. It's like, Marianne, you need this insurance. No, I don't need it. I'm busy, blah, blah, blah. In 2021, at the beginning of 2021, another friend comes up and tells me the same thing. But difference is that she actually educated me on the importance of that particular kind of policy that she was recommending. She gave me the reasons why. She gave me the benefits of it. And I said, look, I don't really have money because I'm not working. But because you have given me all this information, I'm going to do just a small policy. And then when I go back to work, I will take another one. She said, that is fine. It's better to have something small than not to have anything.
Yeah.
This is beginning of 2021. On 30th of 2021, and I want you to mark these dates, 30th of 2021,
Which month?
March, my policy was approved and I paid the first premium. So I opened that account and I put in the first amounts that are required to make it active. Exactly 30 days later, April 30th, 2021, I was diagnosed with a cancer. 30 days difference.
Just 1 month.
Now, imagine if it was the other way around.
Would have been really bad.
I would not have been covered. I would not have gotten that account because it's dependent on your health. I'm a risk. But the difference between being educated and being uneducated. The first person in 2020 did not educate me at all, just told me, you need this. Yeah, I need it. I can have it today. I can have it 20 years, later. It's not that important. You do not emphasize the importance of this. But then now here is another person who tells me the importance, educates me on the need and the importance of this account. That if I got sick, luckily I wasn't critically ill. If I get to that point where I'm critically ill and I need help, I need somebody to take care of me. I need my husband to hire somebody to take care of me. There is some money in that policy that can be used to take care of me.
So this is the part where we're discussing about the life insurance.
Absolutely.
Right?
Yes.
Yes. And that was one of the key points I wanted you to really, really talk about, because I want people to understand the benefits of life insurance.
Mm-hmm.
When we speak of life insurance, the first thing everybody thinks about is death. Like they will never benefit from that insurance. It's just whoever's left behind. The beneficiary is whoever's left behind.
Exactly.
It's not them.
It's not about them.
Yes, but your story is a very good example of what life insurance can do for you.
Exactly.
And I want you to talk about that because, again, it also depends with your health.
Yes.
Just like she mentions, if your health is not that good, you have terminal illness.
Yeah, and the unfortunate thing, Lemmy, is that most people come back, even after we have educated them, they come back when it's late, when something has happened. It's like, Marianne, do you think I can get that? I can open that account you were talking about? You have heart disease. You were diagnosed with heart disease. When 2 years ago we talked about it, you could have taken it before you were diagnosed. Because there's a database. There's a database that people do not know, where everything, it's like the credit report, where you're going to apply for a credit card,
Yes.
and they pull your credit report.
Yes.
There's a medical
Yes.
credit report.
Yes.
So when you get sick, there's certain all the records. I actually pulled out my records.
Yeah,
It's called the MIB.
Yeah, your health data is in there.
Exactly.
This is what they use to determine if you can qualify
Or not.
if you can qualify or not qualify for this insurance.
Exactly.
And the earlier you get, the better chances for you to actually get it.
Yes.
And this is what we have in this kind of conversation. If you're a young person, it doesn't matter what age. It could be a kid, it could be a youth, it could be an adult, it could be an elder. As long as you're not sick,
Yes.
you can get this.
Yes.
And you should get this, matter of fact.
Exactly.
Because you really need it. You never know what tomorrow holds. Tomorrow is the unknown. I know every day we leave, we always assume if I'm okay today, I'll be okay tomorrow. Full of surprises.
Yeah.
So in your case, you see, after you got diagnosed and you
Yes.
had the insurance, everything's been working out for you.
So far, so good. I've not had to use it. And also something very important, that you cannot take the policy, let's say today, and you're diagnosed with heart disease 2 days, 3 days later, or even a year later, and go claim the money. There's what they call a 2-year
Window.
grace period,
Okay.
or look back period. Then we look back the last 2 years. What has happened? Was it there before you took the policy? Which means, like in my case, if they went back and looked back, I wasn't sick. So when they pulled the data, there was nothing showing. Now, but if I had gone back a year later and said, hey, I have this cancer, they know it wasn't there when they checked the records. But if it was there when they checked the records, then, or it's something that they knew there were indications that I could develop this, then you can lose those benefits. So
they just cancel your policy.
right. So you have to be you got to be healthy. And I always say, the earlier the better, just like Lemmy, you have said. A child as early as 2 weeks old, 15 days, as soon as they get their social security number, they're eligible to get a policy account. You open for your children these accounts. They are so cheap, and these accounts don't ever change. They will never increase. They will never be cancelled unless you're not paying. Unless you know, and really it's not paying, because a big portion of what you put in that goes into what we call living benefits. That money will be used for the time when you're not living benefits, but cash value. The cash value means that money is actually growing there for you, that you can actually use it as a bank account. So that is what a lot of the wealthy do for their children. Those people who get enlightened by this are doing that for their children. I was actually talking to one of my clients yesterday, my therapy client yesterday. We were talking about this because there've been some life changes in their life. There've been a few changes, and she was talking about her son, because she saw one of my flyers, and I told her, I'm meeting a family that has young children, and we are going to talk about this. Her son is 29. She said, oh, we got his policy when he was 15 days old. So he's set for life. Then there's another one, actually, another friend who retired last year. Physical therapy. She retired last year, and we were having that conversation where she was saying, okay, now I'm not going to work anymore. She's not even retirement age, but she's retiring anyways, because she said, I don't need to work anymore. My mom is old. I'm going to take care of my mom. I say, how are you going to manage? Are you going to draw your retirement? Say, no, mom has money. I don't need to work anymore. Then the next thing she said shocked me. She said the parents got these policies for them when they were babies. They are two, she has one other sibling, when they were babies. But the parents continued to fund these policies, and the trust, we go back to the trust. In the trust, the executor's instructions are that when the parents die, when the last of the parents die, is when now these policy accounts can be activated for them, for the two siblings to get their money. But they know they have over $1 million in each one of the accounts. So you find that we are lacking, as a community, we are lacking this information. And that's why we are trying to see as much as possible that we can get our community to get this information, so that mostly those who have their little children here and those who are working here, if you are under the age of 55 or even under the age of 60, you need to have this account, because that's when we are starting to get sick. That's when we are starting to get diagnosis of various things. And if you're not protected, if you don't have this account that you can actually pull some money out of it to help you when you're going through these things, then you need to think twice. And you asked me about the kind of insurance. So there are various, if you don't mind, I'll go through the different kinds that are available. Most of us know about term life insurance. You are told it's cheap. It's what, 29.99 for whatever from the advertising. But the term life, I always ask, because it's 10, 15, 20, or 30 years duration. Do you have an agreement with God or with your creator that in 30 years you're going to die, so that the money now goes to your beneficiary? Because you will not use that money. It will go to your beneficiary. You don't have an agreement with anybody.
There's nothing for you right there.
Yeah. So even if you're paying that 19.99 for 200 or whatever amount of money that policy is holding, the minute you hit that 30 years, it shoots from that $19 to 299 or 399. Depends on your age. You may not even qualify, because now you're 30 years older. You have this sugar here. I have sugar. Diabetes.
Yeah.
Or you're taking some high blood pressure medication. Your health has changed. Your life has changed. Your age has changed. And you decide, okay, it's too expensive, I'm not taking it. Then what happens? You become uninsured.
Yes.
And you become uninsurable because you have these diseases. Okay? So that is term life.
So, quick second
Yeah.
on that time life.
Yeah.
I got a question for that one.
Yes.
So, like you say, you've signed maybe till when you're supposed to die.
If you said 30 years,
yeah, exactly.
a term
You
for
had signed
30 years.
you had a time frame for 30 years,
Correct.
and 30 years came along and you didn't pass on.
Correct.
And then your policy cancels because
Exactly.
now
It lapses. Yes.
What happens? That money's gone.
It's gone. It's gone.
Whoa! What a loss!
It's gone.
What a
So
loss.
you've been putting money for 30 years. That's why I asked, did you have an agreement with God that at 30 years, after 30 years, you'll die that 30th year, that last day of that policy, so that now you can get your beneficiaries? You don't have that agreement. You don't know when you're going to die.
Money just wastes on drainage.
It's gone. Remember that this did not have living benefits in it, which means that even if you got sick, you could not take any money out of it.
Yeah.
If you missed just one
Payment.
There's no grace period. It cancels.
Jeez.
When you get to age 65, a lot of them automatically do not insure after age 65. And people now are living to 100?
Yeah.
So you have no insurance. Then the next one, most of the time I'll ask people, hey, do you have this account? We're talking about this. Is it life insurance? It's an account that will help you in time of need. No, I have one with my job. My job has a policy for me. It's called group life. Your employer is paying for it. Do you have a guarantee you're going to be at that job until you die? You have no guarantee.
No.
If you're sick, that money that is being put in there is not going to help you. When you lose that job, it's gone.
It's gone, yeah.
When you get sick and you're not going to work, you're no longer employed, it's gone. And you cannot port it from one job to another job.
Yeah.
Once you're working with Time Warner Cable, you leave Time Warner Cable and go to Sprint. They used to be Sprint. Now you go to AT&T. They do the same things.
Yeah, but that one
But
is
you
gone.
cannot take it to AT&T.
No.
So you have to start over.
All over again, yeah.
So is that helping you? It's good, yes, because it's being provided. It's good to have it. But you need something on the side. Then there is whole life. Whole life is good because it covers you until you're old. But again, it does not have those living benefits that you can draw money out of when you are sick, when you need it. Excuse me. Then now we have what we call the Index Universal Life. The Index Universal Life is so important and has such good benefits in it that really is not something that we should be thinking twice about. Let's look at a child who is born today or who is 15 days today, and the parent decides, okay, I'm going to open this account for my child. That child, even with $50 a month of contribution, or let's say you're comfortable to put in $100 a month as a contribution to that account of maybe $250,000, that is the amount that is locked. Unless you want to add, it doesn't increase. You can add if you want. That account will be with that child until whenever they want to use that money. So if you're saving for that child for college, you can save that money there because a portion of it goes towards the cost of insurance and the rest of it goes towards an index account that grows compounding. This compounding amount goes into what we call a cash value account. That cash value is like your bank. You can withdraw money there for the child when they need a car at 18 years old. You can withdraw money from there if you would say, okay, I'm going to fund this account appropriately to be able to pay for this child's college when the time comes. You will get that money from there instead of putting it in the bank where it's growing at 0.25%. Here, it will grow from anything from 9% and up. And it's guaranteed that that money will never get lost. It's guaranteed that you will never lose money in that account, that the child will always have money in that account as long as you're funding it and funding it correctly. It will grow money so that's what you're hearing my friend who is retired saying that the parents have $1 million policy, account for them. That is what the parents did for them. That's the one,
yes.
She went through high school, went to, did an undergrad, went to physical therapy school, never paid a penny because these accounts were taking care of them. And now it has enough for their retirement. So what are we missing, Lemmy?
That knowledge. And it's even a good question. Do you think we have that kind of system in Kenya?
I don't think we have the exact system, but I do understand there are some insurance companies that now have those accounts, but they're not as detailed as the ones we have here. I've heard, I don't take my word for this because it's just something I've heard that there's one of the companies, and I don't know which one because I heard it when I went home just recently when someone was talking about it, that they were actually able to take a loan out of their policy. I used to have an account in Kenya but that was many, many years ago. So I don't know what has evolved these days, but I'm certain there's some policies that you can actually use, what we now call them as policy accounts, because they're really accounts that you can transact. You can get money out of them.
Oh, that is great, man. And that's the thing about over here. That's what I'm saying. In America, usually they have this infrastructure in position where people can take advantage of. Back home, this was never something. And if it was there, nobody ever shared this kind of information to other people.
Yeah.
But now we appreciate people like you letting us know what's going on. We can take advantage of this kind of systems from back home. If you live in Kenya, please let it be your homework right now. Do a research. Find out if you have any type of life insurance in Kenya and what really fits you. Because, hey, like she said, if something happens to you, who got your back?
Yeah.
Don't say your mama, and she's making no money. Don't say
or
your
if
friends.
she is, it's her money, not yours.
Don't say your friends, because they have their whole life to live as well.
Yeah.
Don't say your kids.
Yeah.
Who got you?
Yeah.
Don't say GoFundMe.
We have to get out of that GoFundMe mentality. We need to get out of that GoFundMe mentality.
You know, it's crazy because GoFundMe is pretty popular, and we have seen stories where it has worked.
Yes.
So people always believe in that. If it has worked for that person, then
it will work for me
as well. Yes.
Not always.
Not always.
Trust me, I have seen even in our community here, where we have had a GoFundMe for somebody and have raised almost $100,000. We have had a GoFundMe for another person, and it was less than $5,000. What is your network? Your network is your net worth.
Yes, ma'am.
Because if you're not integrated with the community and you expect that the community is going to rally behind you when you have an issue, it's not going to do it. You better
you're
have
lost.
that. And
Yes.
even if the community is going to rally around you, have something for yourself.
Yes.
I was actually listening today and talking about this also. When you have a child as a parent, because we have a lot of single parents. I was a single parent for a long time. When you're a single parent,
Yes.
who do you expect will take care of your children when you have an issue before they are old enough?
That's a good question.
Who do you expect is going to take care of them? And most of all, actually, on my way to your studio here, I was listening to a podcast, not a podcast. I like to listen to public radio, NPR, and there was a guest, an author who has written a book called "A Beautiful Thing," and that beautiful thing she's talking about is actually her daughter, who has disabilities. She can't talk, she can't walk, she is blind. She has multiple disabilities, and it's difficult even for her as a parent to communicate to her. So she has designed a way that she can communicate with her and know what is going on because she's nonverbal. But the way she said it, I was like, oh my goodness, I wish every parent could listen to that podcast, to that broadcast, because she talked about how she has prepared her child for when she's gone. She's 65, her daughter, I think, is 25. She said she has a house for that child. In the compound where she lives, she's got money. She's in California. She has a good job. So she has a big property, and within the property, she has rental homes. Then she has a main house for her daughter. And she says these houses will bring enough money for her to be taken care of when she, the mother, is gone.
She's gone. Yeah.
But the one important thing she said, and that's when we come back to trusts. One important thing she said that her daughter is on Medicaid. You do not go to Medicaid when you have property. You cannot be in Medicaid when you have things, when you have means. Her mother, I think she's a professor or something. She's somebody who has money. She's an author. She has assets.
Yeah.
But yet her daughter is in Medicaid. And yet she's also talking about the fact that when she is gone, her daughter will have enough to take care of her.
I was able to pull that.
A trust is not subject to Medicaid. There's something called Medicaid called spend down, which means if you're sick and needing care, government care, which means it comes the medical aid from the government, you have to spend down everything you have and be poor. You have to be poor to get Medicaid. It's not Medicare. It's Medicaid.
I know that sounds like they have what do you call it, Section 8.
Exactly.
Yes.
Yes. You basically have to be a Section 8. But the richer people, those who know, those who have read the books and understand the tax codes, they understand all these intricacies of the works of the government, because the tax codes are in that tax file, in the tax book. You got to read that. It has more words than the Bible, they say. But if you don't have somebody to comb through those codes and tell you which one is important and which one is not, you only your 401k and the 1099 and whatever else, 413B. There's so many more. 529 for your child's college. There's a lot more that we need to know, which is what the rich people live by, or their assets are hidden within those tax codes. We got to understand these tax codes, because there's no way somebody like this person was talking would have the assets she's talking about, and yet the child is in Medicaid. something is not adding up. So when you understand those tax codes, you know where you can put your money. Let's say, for instance, we have situations of the wealthy people in this country. You know, Warren Buffett, even our President Trump and many others. How do you think, do you think they have a 401k? Or you think all their money is in
In a bank
in a
somewhere?
bank somewhere sitting?
No way.
No.
No way.
In an index account, the limit, let's say I have a $1 million account. Based on my age, I could have a limit of maybe putting in that account more than $60,000 a year. In a 401k, I can only put what is by my employer. And the same thing in a Roth IRA or any of those IRAs, there's a limit to how much you can put in there. In index accounts, the limit is you.
It's up to you. And even for the wealthy, they do that so just in case if someone happened to sue them,
It's protected.
yes, you're not gonna touch that money.
You cannot in money in an index account does not go to probate. Money in an index account is not subject to bankruptcy. So how many bankruptcy whatever has Trump filed?
A bunch
If
of
he
times.
was a regular person, he would be broke as a church mouse.
A bunch of times, yeah.
But money is protected through index accounts and not hidden, but protected by trusts.
Yes.
Same situation if you were to, just going back to the disabled child. We have parents here who have disabled children or children with disability, mental or otherwise, and they're putting that money in their account. You're going to a financial advisor. A financial advisor is going to tell you, and there's nothing wrong with that, but you need to diversify because money you put in any variable account, you go to your bank and you tell them, oh, I want advice on where to put my $40,000. It's in a variable account. The money market decides where that money is going to be. But if you diversify, put some in an index account, put some in an annuity account, put some in, with your financial advisor, so that if anything were to happen, you don't lose everything. You don't lose everything,
Yes. Oh yes.
It's
Yes, we have had stories even in the past where sometimes if you put all your money in a bank account, sometimes the bank they shut it down, it closes,
and how much can you get back?
it's gone.
It's only 250,000
Yeah.
that is protected.
And we have
of
people
your millions.
who got nothing. They lost the whole amount of money.
They lose everything.
Yes,
Yeah.
yes.
Yeah.
But I wanted to ask you these questions for the viewers watching us right now from all over the
Yes.
world, man, and they have listened to you, they have heard all this good stuff you
Yes.
just told them. For them to be practical, where can they go and practice what you just mentioned right now to get the insurance and
You have to talk to a financial professional who is properly licensed. In this country, you have to have an insurance license. And let's say for North Carolina, I have to have an insurance for license for North Carolina, and then every other state that I want to work in. I'm licensed in 25 different states. So let's say like you're in Washington State, you are in DC area, you are in Maryland, Arizona, California, Texas, Florida. There are lots of states that I'm licensed in. This is only done through a licensed professional. You cannot just go to the bank and tell them, hey, I want this account. They don't have it. They don't have it. The other very, very important thing is the structure of that account. It's very important that when you talk to a licensed professional to structure this account for you, make sure that they know what they're doing. So we go through a lot of training. We get almost every week we're in training from all different kinds of companies, from different mentors who have been in this for a long time, so that we do not make a mistake when we are writing and designing a policy for a client, because that would be fraud. We can go to jail.
Yes.
I can get stripped of my licenses. I have to take what is called, I have to have what is called an errors and omission coverage, just in case I make mistake. But the goal is not to make mistakes. If you make a mistake, you will go to jail. You will go to jail because you're playing with somebody's money and their livelihood. They're depending on you to give them the best that you can. If I'm not sure that I can write you the policy account that you need, then I call my mentor and tell him, look, I have this person, they have $1 million or they have $500,000 and they need a policy account. And this is what they're looking for. Can you help me design it? And my mentor will sit down with me and we will design it.
Okay.
You cannot just go and get somebody, oh, I sell insurance. No, I educate you first. I need to know, why do you need this? Are you all the other bases covered? What is the end game? You want it for your children's education? You want it for your retirement? You want it? We need to have what is the end game for you in this, so that we can guide you and help you to come up, or rather help us to come up. Your information will help us to come up with the best thing for you, so that at the end of the day, you know that this is for keeps. It's not something you're doing today and canceling tomorrow.
Yes. Yes.
That's why I always tell my clients, let's sit down. Let's look at your circumstances. You're not going to tell me you're going to be saving, you're going to be, you need $1 million account and you're going to be saving $500 or $200. That doesn't work, because $200 cannot fund an adult's $1 million account. Let's calm down. What's the end game? How much money do you want to have in this account at this age? Say you're 30. At 65, you want to retire. What are your possible retirement requirements? How much money do you need in retirement? So let's see. If you have $200 now to start funding this account, can you grow it so that it gives you enough to retire with? Because three things about this account is that not only when you're critically ill can you use that money, not only when you're chronically ill or terminally ill. The chronic illness benefit of it also implies old age, which means it will serve also as a retirement account or a long-term care account when you get old. Because chronic illness means you're not able to do any two activities of daily living. That's why people go to look for nursing homes or somebody to take care of them, because they cannot give themselves a bath. They cannot move from this chair to their wheelchair. They cannot feed themselves. They cannot clothe themselves. Some of those things will be taken care of if you have an account that you can fund properly. We can start as, a lot of people, and probably you'll be asking that question. So what's the lowest I can go? Where can I start? We can start where you want and where you can afford.
That's a key point, because I was actually about to ask about the retirement plan. That's what you just mentioned right now,
Right.
because that is one of the main things our parents missed out. They forgot to plan
Absolutely.
that, because everybody also, they always listen to what the society says. Yeah, we're supposed to retire at the age of 65. But our question is, what's the plan though?
Exactly.
Because in their
It's not
mindset,
practical anymore.
yes, in their mindset, they're only thinking of physically not going to work. It's
Exactly.
like, okay, now I'm gonna just stay home.
Yes.
But that's not it.
It's not enough.
Yes.
We
What's the
need to
plan?
learn strategies of retirement. And that's why if you're in Raleigh, that's why, we're talking about that event that we have on the 28th. You need to sit down with somebody who can help you strategize. Like I said, what are you hoping for? How do you want to live your retirement age? If you want to retire at 65, do you have enough money? You want to take Social Security at 67, which is the
Eligibility.
eligibility age is 65. So you start taking your full Social Security. We don't even know whether Social Security will be there for some people.
Oh yeah.
So if it's not there, or even if it's there, is it enough for you to lead the lifestyle you have today?
Probably not, man. We have seen so many elders going back to do jobs like Walmart.
Walmart,
Yeah.
greeters.
Yes.
Yes.
Because that social money is not.
It's not there,
It's not
and it's not enough. The other thing is, and I saw this, and I felt like I wanted to cry for this person. This person was an executive somewhere, and he had a lot of money in a 401k. A lot of money. It crashed with the housing. He was retiring in 2008. So he goes and retires, and the market crash happens. So 50% of his retirement in his 401k was wiped out. 50% was wiped out. What do? You have to go back to work. Because say you had $1 million, you're now down to 500,000. Remember, in a 401k, you'll be taxed when you start drawing that money.
Yeah.
So you're getting taxed on 500,000, which you had expected to be $1 million. So even if you are taxed on $1 million, you would be, it will not be so much.
Yeah.
But now you're being taxed on 500.
Yeah.
And you have a spouse. How you gonna live when you are retiring at 65, hoping now I'll live the best of my life because I have money?
Yes.
Social Security is not enough. You still have a mortgage. What do? You go back to work. You go back to work.
You go back to Africa.
Or you go back to Africa.
That's the best I can tell you,
Yeah.
man. You go back to Africa.
Because
man.
that's the only place really that you can manage to live on $1,000 a year, a month.
Yeah. You gotta go back to Africa.
That's the only place you can afford to live in that. So we really need to rethink our lives here. We really, really need to rethink how we are living here. Because if you're going to live in this country, or you want to live in this country and then go and live in a different country for retirement, remember, retirement is until death. And a lot of us, there will be something that will make us go to that end. You just won't sleep and die in bed. Some of us will be sick. Some of us will have some disabilities. The period, that process of getting to that point of dying is different for everybody, unless you have like cardiac arrest and you die in 2 days. A blessing, really. But if you're going to go through the process of death through disease, you got to be prepared. And none of us has given God the gold medal and said, hey, God, here is your, this is the way I want to die, and this is the way I want it prepared. It doesn't work that way.
It doesn't work like that.
It doesn't work like that.
Yeah, it's definitely the unknown.
It's different.
Yeah, it's definitely the unknown.
So we what I'm saying is we need to rethink how we live. We need to rethink how we are planning to live to our deathbed.
Yes. Again, I know this is going to be the biggest question most of these people, most of our viewers would probably end up having. It's always the expense, how much money you have to pay, or at least how much money you have to save so you can make this kind of payments that you have to pay every month for these policies. Most people right now, they complain the economy is tough. We don't have any extra money. I can't afford anything. What do you have to say to these kind of questions?
It's as low as you can. You tell me, I have $100 a month. That's what I can put away. I will design something that will be good for $100 a month. So there's no blanket that it has to be this much. No. That's why I sit down with my client and we discuss. I want to know your situation. I don't want you to say, I want $1 million and you're putting in, like I say, $200. $1 million, unless you get a term life, which is not going to help you because it's going to, if you're not going to live longer.
Of course.
But having said that about term life, I'd rather you have a term life than have nothing. I'd rather you have a term life than have nothing. Yeah.
Something's better than nothing.
Something is better than nothing. Why? We have seen it here. Somebody passes instantly, just like that. They have nothing. Somebody goes to hospital and stays for 2, 3, 4 months, whatever, and they pass away. They have nothing. They have left a spouse. They have left children. They have, at least it's better than nothing. And these days, there are some that we can actually design those term life to start you off slowly. And then after 2, 3 years or whatever, whenever your circumstances become better, we can convert that into an index account. So now the landscape of insurance accounts is changing. It's not what used to be there where everybody will say, oh, I can't do that. I can't do that. No, it's changing. And there are so many opportunities. And the one thing also I'll also say is that we are so afraid as immigrants to get these accounts. There's nothing to be afraid of because a lot of the companies understand our circumstances as immigrants. And we will talk to the one that is right for your circumstance. You all know what I'm talking about. Mm-hmm. We will be able to work out something for you so that even if you're living in this country without all your documentations, but at least with some documentations, we can get you protected. We can get you protected. Because it's all about protection.
Yeah.
It's all about protection.
Yeah. That's exactly what we're looking for.
Yeah.
Oh, that is going to make a big difference to our society because now we get the education. We get what you're telling us exactly what we need. You got information where we're supposed to go to get the right people to help us out.
Correct.
And actually, if you don't mind, could you mention that again? You say May 28th?
May 23rd.
May 23rd.
May 23rd, we'll be at the Hampton Inn in Raleigh. The Hampton Inn, and I'm sure you will be able to share the address. It's those who are in Raleigh, it's near Wegmans and Costco in Raleigh.
Yeah.
The Hampton Inn that is on there. And we'll have 2 sessions. We have a session in the morning starting at 10. We have another session starting at 2 o'clock. It will be the same information. And we will have an estate attorney, actually, who is going to come and talk to us about trusts and trust funds. We'll be talking about how to protect your businesses because a lot of us are business owners and we have not protected our businesses. So if anything happens to us, our businesses disappear.
It's gone, yeah.
Yeah. So we need to know how to protect them. And then also how you can benefit from this, your business, to help you put some of that money that is coming in from your business into an account like this one. So that now you're giving yourself bonuses that reduce your tax load from your business taxes. And then also the other thing we are going, of course, we talked about retirement strategies. We are going to go deeper into those. And then the most important thing is how to create generational wealth. How do we create generational wealth? Do we die and everything falls apart when we die? We've heard about the Rockefellers we have the Rockefeller Foundation, Rockefeller Fund, we have Rockefeller this and that. I remember I heard about the Rockefellers when I was in Kenya. I was just out of high school. I heard about Rockefeller Foundation because they were giving scholarships. I was actually a beneficiary of a Rockefeller.
Oh, yeah?
Yeah, through the U.S. Embassy. I was a beneficiary of a Rockefeller fund, but I had no idea who they were. Just to learn more about them and realize that these people used index accounts,
Yes, they did.
insurance money,
Yes.
to create the wealth that is today generations down the road.
Yes. But what if you don't have a family? Do you have to worry about generational wealth?
You have family, you have relatives. How are you just by yourself?
You want to leave something for your.
Leave it for you. At least there's something you hold dear to yourself. You're a podcaster. Maybe you have people who are interested in becoming podcasters. You start a foundation,
Yeah.
and that the benefits will go into that foundation.
That foundation. Yeah, but I was saying for the family, if you don't have your kids, you're not living for nobody else. You know what I mean?
Do you have relatives?
Yes, but if okay, most I'm not speaking for myself, but I'm saying what I see from other families, right?
Correct.
Some families don't get along, or some
Yes.
families don't support each other.
Yes.
You know what I mean? So if you're in that kind of situation, you don't want to leave nothing to that kind of people.
You
They're
have a
not supporting
church.
you.
Leave it to a church.
Yeah, might as well, but not your family.
Yeah,
Not-
I mean,
your relatives.
basically, you don't have to leave it to your family.
Yeah.
That generational wealth you don't have, and really, like the pastors in this, we have so many pastors around here, and they have foundations. Let's say you have this kind of account, and you pass away, or you decide, I'm going to fund this account so that when I get to this age, whatever cash value has grown in this account, I can take some of that money and go do a project, go for a mission. Or when I retire, I want to be just doing mission work.
That's it. Yeah.
And I can't do it with my 401k.
Yeah.
But now I've created this fund here, and I can take some money from this fund that has been growing, and I can go do mission work.
Completely.
It's a ministry.
Yes.
I actually know several pastors who are in this business. I know one from Zambia, and I know one from Cameroon, and another one from Ghana. No, from Nigeria. They do ministry work from their funds that they get from their what they grow in their cash value account.
Oh, nice.
So yes, it doesn't have to be your family.
Of course
if
it
you
doesn't.
don't get along with your family, there's something that is dear to your heart that you would like to support.
Yes. Yes.
Yes, that's why you hear that. Let's say like you hear endowment funds. You hear so and so has left an endowment for Duke University or for a certain organization. That's where some of the money is coming from.
Oh, for
It's
sure.
from these funds.
Oh, yes, ma'am.
Yes.
Yes, that's 100%. So, my viewers, if you happen to live in North Carolina in the areas of Raleigh, Durham, Cary, Apex,
Chapel
Hillcrest
Hill.
Arena, Chapel Hill, Ghana, please make sure you come to Raleigh on the 23rd of May, May 23rd in the Hilton Hotel.
No,
I'll definitely
the
put.
holiday. It's the Hampton Inn.
Excuse me, Hampton Inn.
Hampton Inn.
I'll definitely put the address down here on the screen. So Hampton Inn on the 23rd. You gotta come there because this is great information. You need this. There's no way you can have an excuse. We need this information.
And
This-
it's free.
and it's free as well.
It's free.
Listen
Yes,
to that, man. You can't
it's
miss
free.
this.
It's completely free, no obligations. We want you to learn.
Please
want
show
you
up,
to
man.
learn.
And like you said it's 2 sections, 10,
It's
10
two
a.m.
sessions. You can come in the morning from 10 to 1 o'clock, or you can come in from 2 to 4 or 5 o'clock. Don't be late because we start on time, we finish on time.
23rd is what, on a Saturday?
23rd is a Saturday.
Hey.
It's the Memorial Day weekend.
There's no you can miss on that one. What's your
Yes.
excuse? Most
Exactly.
people are usually free on the weekend. What's your excuse? You can't tell me you just want to go out,
I know.
go to the lake. You can always go to the lake any other day. This
You can come in the morning sessions, go to the lake in the afternoon.
no, this day they have to take time out. After they get the
Thank you,
information, you
yes.
go sit down and think and
Digest.
rethink about that. Yes.
Digest it.
And have a discussion with your family. This is
Yes.
important information. The lake can wait. There's the weekend after that. You can go to the lake. This is very important.
And actually, the lake can wait. This does not have.
It can't
tomorrow.
wait.
Remember, I had my situation was 30
Yes.
days. Do you have 30 days?
We don't know.
We don't know. Maybe it's 3 hours.
Yeah.
Maybe we don't know.
You don't know.
We don't know.
So please take advantage. Do not be another guest coming to my podcast to cry. I wish I knew. I wish I did. I wish.
Yeah.
Hey, we can only tell you sorry. That's the best we can do. But now you have a chance. Save yourself. Just like I mentioned in my other podcast, your health is your wealth.
True.
Nobody can take care of that for you. Nobody can take care of that for you. It's only you. So you take care of that. And if you're a podcaster, make sure you you tune into my podcast. Because like she say, if I'm gonna leave something behind, I'm not leaving anything for you if you're not tuning into my podcast. You have to watch this. You have to subscribe to the platform for me to leave something for you guys.
Yes.
Yeah, you get that? If you're a family member as well, you get that? You gotta subscribe to the platform. You gotta support it. That's the only way I'm gonna leave something for you. Huh?
And actually, let me add on something else. If you live outside of these areas, if you live outside of the Raleigh, Durham, Chapel Hill, Greensboro, if you're not able to come to Raleigh for that day, you can always send me a message. Send me a message. We will share my phone number, and I can do a Zoom with you, or I can come to you. Like I say, I travel next weekend. I'll be in Washington State. We'll be holding another event in Seattle. So we travel. We can travel to you because we want this information to reach our people. We need it to reach not just, and when I say our people, I say everybody. If you're middle class, you are my people. If you are lower than middle class, you're my people, because the 5% up there know this information, but the rest of us don't know. So we want to make sure that all of us get it. So yes, you can send me a message, WhatsApp message, or respond to Lemmy's podcast, and I certainly am ready to educate you. No obligations, and it's free education.
Yes, actually, if you don't mind, if you have any handles and you can give up your phone number, the one you want them to
Yes.
use, please go ahead so they can.
Yes. Yes. My phone number is 919-247-5568. Again, it's 919-247-5568. You can send me a text message is the best, because if you call, sometimes because I get lots of telemarketing calls, it might be blocked. But if you send me a text message or a WhatsApp message, it's guaranteed to get to me. And just say you are listening to this podcast and you want further information. I'll be so happy to help you out, mostly to educate you so that you can make an educated and an informed decision. It's very important.
Yes.
Yes.
So please, like she said, make sure you write down the number, tag my podcast when you write a text. She'll know exactly where you're coming from, because we try to make sure this is not spam, because some people, this is just spams on our phones. So please tag my my podcast, and she'll definitely give you a call back, or at least text you back.
Yes.
But Marianne, I want to thank you so much for all this information. I feel so great, man. I'm actually looking forward for the 23rd, because I want to attend
Yes.
to that event as well.
Absolutely.
The one I did last night was also very informational, but I'm not going to discuss that to you guys. Right?
The real thing will be happening here in Raleigh on 23rd at the Hampton Inn by Costco in Raleigh.
So the one in Raleigh right here that's happening, can they go online? Can they Zoom, go online, anything like that?
No, it will be in person.
Just in person.
That's in person, because we want people to be there present. We want people to be there present. We hold Zoom every now and then, but we want people to come in and actually,
experience the whole thing.
But if you're if you're not able to come in, or you are outside of our zone, hit me up. Yeah. I will be happy to go on Zoom with you and talk with you and walk you through the process. And it doesn't matter your background, wherever you come from, just let me know. Mexico, Canada, anywhere. Within. However, the product is for North America, the United States and Canada. But if you live here in the United States or Canada and you're from any part of the world, we can help you. We can work with you. Any part of the world. If you live in the United States or Canada, we can work with you. So you're welcome.
Sorry, guys, if you're in Kenya, it's not for you.
And unfortunately, but I'm sure there's some.
Of course,
one of the
for
insurance company, one of the products. I'm sure they have some products that will be close or similar.
Yeah, do your research. Do your research in Kenya.
Yes, it's important.
Yes. Once again, if you live in North Carolina, again, the Raleigh, Durham, Goldsboro, Chapel Hill, Apex, Fuquay Varina, Ghana, you name it. Come over here, attend the event. I'm telling you, what are you doing? On the
Yes.
23rd of May, don't miss it.
Yes.
Your health is your wealth.
It's your wealth.
Don't miss it. You will never regret that. I promise you that. Anyway, thank you once again. Thank you, Marianne. It's been very informational today. I've enjoyed your presence over here.
Thank you.
I'm pretty sure everybody has learned a lot on this episode. And
I hope
if
so.
you haven't, please, like I always say, rewind the whole thing and listen to it again.
Yes.
Rewind the whole thing and listen to it again. And jump on the comment section and ask all the questions you need to ask. You're gonna get your answers right there in the comment section. It's pretty easy like that. Do not worry. Do not run away. Do not feel like it's too much for you to understand. We are here for you. Again, Chafu Meza is here to help people. This is a platform we build for you to feel better and have a better future. And with that being said, make sure you also subscribe to the podcast, share, like, and like I said, comment. Thank you so much. We will be looking forward to see you in another episode.
Absolutely.
Because
Thank
this
you.
is very great information. I know you got some more. And you did mention you're a therapist as well, right?
Yes, I am it's called neuromuscular therapy. So I work with people with pain, muscular pain, backache, headaches, all that. I've been doing that for 24 years. So our next podcast, we possibly can talk about
That's
that
what
and
I'm
the
saying.
importance of it.
I wanted to
Yes.
say that. I want that to be the topic for the next when you come
Yes.
back over here, because I know, like again, my demography. I deal with from the age of 25 to like 65. So I have
Yes.
people from maybe 55 to like 65 who have that kind of problem. So they will
Mm-hmm.
definitely that's gonna be very informational to them
Yes.
and very educational to them. So they'll probably tune in and listen to you. So
Absolutely.
we're planning for part 2 already, right here, right?
And we'll get there. We'll get there. But I really want to thank you for giving me this opportunity to come and talk to your audience, because some of this information is so important. But most of all, you opening up to let me come and talk. I really appreciate that. So thank you so much for having me.
Oh, you're welcome. You're welcome. And thank you guys so much for watching. And if you're not subscribed to the platform, like I mentioned, make sure
Yes.
make sure you subscribe. Make sure you subscribe. And with that being said, in Chafu Meza, we trust and we out.
And
More things in the building. Chafua meza. Tuko Nairobi tuna chafua meza. Chafua meza.